Welcome to the new series of accounting for managers. It is very essential concept for those who are studying MBA and PGDM students from non-commerce background. It is a foundational accounting knowledge for effective managerial decisions that will definitely help you. What is the overview of this video? So first, I'm going to introduce the accounting uh, for the business use, how to use them, and understanding the financial statement and basic accounting principles and concepts and managerial uses of accounting information and practical applications and case study. Let us begin with the introduction to accounting in business management. As a business manager, why should we learn financial account? What is the purpose? Why should we have this knowledge? The very important thing as a manager of any concern or anything, you must know the financial insight. So the accounting delivers the crucial financial data that support the effective management and inform to make the right decision at the right time. As a manager, you are in the middle level, you are the decision maker sometimes. Sometimes you may help for decision making. So you should know the financial position of your concern. So how do we know that the financial statement? So through that the financial statement only you can get all the details. So before you make the decision, you must know how do you manage your fund, how to utilize your fund, how to allocate the resources. These are all very important. So the resource allocation is that is another important thing. The manager uses accounting to allocate the resource effectively and efficiently. So suppose you have a lot of money in that your pocket, so you cannot use as much as you want your business expanding. So you must have a proper reserve surplus amount that will be used for your unexpected expenses if anything happens. And you have to evaluate your business things. So accounting information that help evaluate the business process and performance that identify the improvement of your business. So it will help you to uh, improve on your book, your financial data, your working capital. The working capital is very important one. So how you are managing your fund, what is your receivable, what is your payable, and what is your regular expenses, what is your cash position, everything you can get it from only the accounting information. And it is very helpful for the strategic decision making that I will explain earlier. The financial insights only help you to make the right decision. The right. So, what are the key concepts and terms we are using in accounts? Uh, Generally, everybody knows there are key terms available in the accounting concept. The very first one is assets. So, what is mean the asset? As an individual, you know what is your assets, what you own, what you have. That is we call assets. Similarly, for the business also, what we own, the business. So the asset what we have, that is called assets. Not only the movable and immovable, sometimes the pattern, the goodwill, for individual we don't have that. Sometimes some of the jobs we may have that goodwill pattern and all. But for the institutions, we have goodwill is one of the intangible assets. So assets generally talk about all your tangible things which you can touch, which you can see. That is called assets. What is liabilities? The liability is nothing but your obligations you have to use to others, which means you have to repay it. Okay. So in business concept, the capital we consider as the liability. So later we will explain why we are calling the capital as liability. So the liabilities are very important. I have already explained the working capital management. What is your payable? What is your receivable? The payable is your liability. your creditor's details. Okay, that is very important. That is liability. What is equity? The equity is the owner contribution. That is also we consider as a liability for that. And apart from this three, very important thing we talk about that called revenue and expenses, which means income and expenses. The revenue is nothing but what you are earning from the business, not only the sales. Sometimes you may earn some the commission you earn from the some other part. So that is also we consider as the income part. What is the expenses? The expenses is very important. Okay. So assets that you can utilize to earn something. But expenses only help you to progress your business. You operate your business. So that is also very important. So whatever you are spending, which is we call expenses, which you cannot see, which you cannot show, which you can only see. That's called revenue expenses, revenue and capital. These are all the important key elements we must know as a manager of the income. So, what is the main differentiate this financial accounting and managerial accounting? So, we are not talk about this one. Okay. So, one thing is the main difference the financial account and the managerial account is very simple. The financial accounting only deals about your past activity. So, which is very helpful for your investors and external stakeholders, and which is very helpful for the income tax returns and other part. So, what is managerial account? Managerial account is focused on for internal reporting. Its main aim is planning, decision making, and controlling your expenses. So, it is very purely this management account is only deals about your plan. But we cannot plan simply. So we can plan only based on the data what you have. Suppose one of the company they want to manage the working capital effectively. So first they have collected all their bills details and their payable detail, receivable detail, and what is the liquidity detail. Then only they can get in the idea. So very simple. The financial account deals your past activity, the management account deals your future activity, which is based on the past data what you have in financial account. The use of accounting data, the understanding the decision helping manager applying this appropriately for the decision purpose. So next we go to understanding the financial statement. So how do we understand the financial statement? The structure and purpose of the balance sheet. What is that balance sheet? The balance sheet is nothing but I have already explained you the assets and liability. The assets is equal to liability. Whatever you have the assets, that is your liability. The asset representation balance sheet highlights what the company owns and control the economic value. Liability and equity talk about how much you have to pay, how much amount share available in the company. So these are all the main purpose of the balance sheet. And next, the understanding of the income statement and profit and loss account. The purpose of income statement, they report the revenue and expenses during the specific period, which evaluate the profitability and efficiency. The profitability insight that will help you for to improve your business more. And in case in future, if you want to expand your business, you can concentrate on which area. And it is very helpful for the decision making for controlling the expenses and controlling your operational expenses, which is very suitable for you. And the cash flow statement that is very important. The purpose of the cash flow statement is to identify the cash inflow and outflow within a company for a particular period. So how you are handling your cash inflow, your payments and receipts, which we call in non-profit organization, we talk about this one is receipts and payment. And you can manage your liquidity and how to manage the cash amount for the company needs. Next, we are going to talk about the important principles and concept of the account. So, in accounting system, I have already explained you the assets is equal to liability plus equity. So what is this asset and what is the liability? Then already we have explained you. So these deals, all of them, we are deals with a double entry accounting system. It is a scientific system, scientific method we are following. In each financial transactions, you can identify there will be a two accounts involved. One account is debit, the another account is credit. So that is why we call this one is a scientific account, scientific system. We have an accounting equation. The asset is equal to liability plus equity, that double entry system for the balanced financial statement. So these are all the things we will talk about in the detail. And here we have the two type of accounting system we are following in financial account. One is accrual basis and cash basis. So accrual accounting method is nothing but to record the revenue and expenses when they are incurred, regardless of cash movement, providing a comprehensive financial view. Example, suppose you are receiving an interest that is happen immediately. Sometimes you are receiving the commission which is not deposited to the bank account. But once you receive the cash, once you receive the check, you have to record it, the commission received. Similarly, for the other things also, if any expenses incurred, suppose you are buying a material, capital material on credit basis, you do not wait until the account settled. Immediately you account it. The assets has received. So immediately account it on credit basis. So that is we call accrual basis. The accrual accounting systems, we record the revenue expenses when they are incurred. The cash is only talk about when amount is paid or received. So it is based on the cash. What is the fundamental accounting and assumptions and important conventions? What is that? So there are different things we are talk about. The company is a going concern. Okay, that is very important one. So this assumption implies that business will continue operate it, and consistency, that is very important. The consistency method we are following it, and conservatism is very important, ensuring the expenses liability on recognized promptly, but revenue only when certain things happen. And the last concept, the managerial use of accounting information, that is very important is the budgeting, forecasting, and planning. The managerial account play a vital role for the managers. It is very important for the role of accounting information for the budget process. And budget is only planning. The forecasting, you're forecasting your future sales, you are forecasting your for purchase activities, you forecasting your cost of production, everything you can plan. These all of them are talk about the managerial accounting. And yesterday I explained you cost analysis and decision making, the fixed cost overview, the variable cost impact. These all the things are very, very important for the decision making. So the next we talk about the interpreting the financial data for the decision making. So evaluating the business health. The managers use financial ratio to assess the company overall financial conditions and operation performance and identify the risk, analyzing the financial risk and challenge. Formulating the strategy, financial data interpretation, guide the manager in developing effective long-term business strategy and other things aspects of it. So the next things we talk about the practical applications and case study in the next video. Thank you for